right. Good morning. This is Digital World Trading, and welcome to our daily market review. We did this video every day to Friday, Monday to Friday, and we also couple it with the weekly and the monthly market review. Just like we all know that recently I posted the weekly market review, which I did today, and I'm not supposed to do it today, but because of network issue, I'm only able to do it today. And I did the monthly video this weekend, which I posted on the channel. So you will definitely need, in order to understand this time frame, you will definitely need to go back and watch the weekly or the monthly market review, as these two time frame are very crucial to what I am looking out for in price. So, notwithstanding and not wasting our time, I want to simply, uh, and not simply tells you what I'm looking at on the daily time frame and what I'm about our usual recap, because this video does not encompass only what we are looking out for, but also I this video will be able to tell you guys what has been done in the past. Like every day, we tell you about the daily profile and how the market trade for that day, and how you could have engaged on that day, the ideal, if it's an ideal day or an irrational day. So those are the things I couple with the daily review, because if I'm just only talk about what I'm looking out for, it will just be like as if I'm giving you guys signal, but I'm only telling you about, helping you to read price, which you can either call it a reading session, which I did every day, to help you guys to read price, tell you guys what has happened before, and how, if it's an ideal to me. Everybody might have their own ideal view on the market, all right? So if it's ideal for me, then if it's ideal according to ICT, then it is going to I'm going to indicate that as well. So I'm going to explain this daily time frame and also talk about the XY as well. So the Euro US dollar daily contract for May 6th, for Monday, May 6th, 2024, deliver as an up close candle, which is this particular day, deliver as an up close candle that tap on the Friday candle week consequent encroachment. So we tap on the midpoint of this week, okay, consequent encroachment, and close below it. So we tap on it and close below it, but we are still what? uh we still close in it as an up close candle. Now on the daily time frame, on the daily time frame chart, we can see the Monday candle lead the formation of a fair value gap or BC, which oppose the directional bias, which is the bearish profile, and also dictate the confirmation of a short ranging in price between those specific areas, which are this area, this consequent encroachment, and this fair value gap, and also this other block here. So now we just reacted off of the fair value gap, and we are going a little bit higher. Our price is retracing, but when we price below and we tap on this other block, it is going to show its own effectiveness, which might either lead us to create a new high, or which might lead us to sweep all these short time highs that will be formed before we rally lower, and that will be a ranging market. Now, if this is the case, I am anticipating for the Tuesday 7 May 2024 to deliver higher, sweeping the Monday 6 May 2024 candle high after pricing into the fair value gap or BC, but not the Friday 3rd May 2024 candle high, as I am anticipating for it to be the potential high of the month. and Tuesday to be the high of the week. What I'm trying to say is that it would be ideal to see this Monday high taken out and this Friday not to be taken out. So if we are going to take that high, it is going to occur on Tuesday. And if that is the case, then we are going to take this high on Tuesday, then deliver lower on Wednesday, tap on it, retrace back. On Friday, we're going to deliver lower. Then we're just going to remain on this range for a little time until and whenever the price is about to go down, it is always going to tip its hand, but maybe you need to be active enough to be able to identify them. All right, so it is very very important as well as a trader. Now in contrast to the XY, I want to take us back to the XY. In contrast, the XY, it is likely to expect, no, in contrast to the XY, it is likely to expect the XY to trade into the consequent encroachment of Friday candle week and below Monday candle low to form the low of the week. So we haven't tapped on the consequent encroachment. So if even though we come lower, it is still essential for price to go lower. And again, on the daily time frame for the XY, we have seen a volume imbalance, a short, a very close volume imbalance in price, which uh, are very very identical. And if price come back to it, it might also lead us to see bullish price. And if you are seeing bullish price, then that is going to see a bearish price on euro. So this, because if the XY is our indicator, we need to also potentially look towards that area. And this area of liquidity is so efficient that it is drawing price rapidly. It's going to draw price rapidly towards it. So let's go to the 4 hourly time frame. On the 4 hourly time frame, why I mark out this area, right, is because we are looking for, how do I call it? Um we are looking for a signature in price that respect our bullish bias. So if that's the case, we have a volume imbalance here, and now we have what seen a shift in market structure. Now, if we price into this volume imbalance again, because we have already priced below that volume imbalance, but whatever takes us back into that volume imbalance again will definitely indicate that price is going to spool away from it higher, or we are going to come below this low. So there are two things I'm anticipating in price. It's either that price, that volume imbalance is respected and we did not devalue it and it hold price, or that volume imbalance will be breached and price will come below this area before we look for another signature in price to show us that we are going to go higher. And whatever comes below here is going to be a liquidity sweep, not a potential trading center. And also we have our relatively equal highs here. So let's stay let's just keep looking at what the price is going to bring out for us in price, like it's going to print for us, and we're going to work with that. And now I'm going to go to the euro so I can explain some factors. Also, the euro US dollar contract shows how nicely price rallied into the weekly bearish order block and rejected closing on that line effectively. If you look on the 4 hourly candle, we can see that this line, which is the red line, is the weekly bearish order block, we can see how price close effectively on that line without bridging it. Although the weak do the damage and the body speak the language, right? So neglecting the weak, we can see how the market closed perfectly on that line. And, and now we have just see witnessed a shift in market structure below the new swing low that has been created. We just bridge it and price is trading higher inside this specified range. So on the 4 hour, we can see that price is showing a strong decline from that weekly bearish order block, and we just sweep and have a short-term shift in market structure that I am anticipating to be what, less effective, because if it's going to be very effective, we are going to see its full price below these areas, but it's going to be less effective, not very effective. Casting forward, I am looking for euro to deliver a little higher, which could either take periodic high or just rally below and begin to deliver lower. On the one, okay, it's going to deliver lower. And let's go to the hourly contract. Now, on the hourly contract, we see our shift in market structure and also price did rally higher. But yeah, we did sweep this short time buy side liquidity. On the lower time frame, you can see that's a buy side liquidity sweep, and price is still showing willingness to go lower. So that's something we can also look vividly into. So that is going to be very effective. Now, the Euro US dollar hourly contract shows how markets delivered efficiently higher into the weekly bearish order block and trading below it currently. The daily profile for Monday 6 for Monday May 6, 2024 contract is an the daily profile, yeah, for that day is an obvious 8 o'clock a.m. New York local time as the high of the day that trade into the Friday candles with consequent encroachment. This particular up close candle creates the high of the day, which delivered inside the consequent encroachment and rejected off of that area. The low of the day is formed at 4 o'clock a.m. New York local time that did not sweep any form of liquidity. This is the low of yesterday, which for Monday, and did not sweep any form of or any areas of liquidity. So let's go to the XY hourly contract. We've also seen same thing occurring on the XY, and if the XY has the XY has just sweep a short-term liquidity here right now, and now price is riding away from it. But overall, if we can see price get below here, and now something there's something in price that I cannot mark everything. If you look very well, you can see that this is a an inversion fair value gap. And what happened yesterday, we retest back on that inversion fair value gap. So there is a tendency that we might also come back and tap on that inversion fair value gap before going, or they might just keep pulling it, but it's going to be low. Like the delivery is not going to be fast; it's going to be slow and steady, but regardless, it's going to keep going, spooling higher. So let me name this uh as our what hourly inversion fair value gap. 1 hour inversion fair value gap. Okay, and the visibility should be current interval and below. So that is it for this, and a new hour has just begun. So if we eventually come back towards that area, I want to see its hold price, and you know to for price to react off of that area and scroll higher. So this will bring us to the end of this video. I want to also check the XY euro. Yeah. I was saying I want to call out those the inversion. I want to call out the inversion fair value gap on euro. If you look at euro very well, we have tapped on that inversion fair value gap before going. So we I think this is a potential PDRA for us to keep our eyes on. And also, if price will retest on this area, that will make it more effective, and that will also indicate a sweep on this liquidity before we go lower, or it might continue going lower from this area. But that's not going to take us all the way to this low, maybe inside this range. All right, so we should just have our eyes on these potential areas. And this has bring me to the end of this video. I hope it was insightful, and if you enjoyed, please do subscribe to this channel. And thank you for keeping up with digital wealth trading.